let's look at tin futures and also an ETN. First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. So tin is under the base metals, and it's a natural resource. The move from the 52-week low has been a spectacular 139%. And we have seen, around 4-ish% pullback so far. So here is the chart. Weekly data points, a big picture. It is pretty clear that this is one of those commodities that moves in cycles. Sometimes we have these small rise decline cycles, but you also have a tendency to have these major time cycles. I did try to draw them in, but they haven't been that consistent. But the take-home message with these kinds of this kind of price action is that it's best to buy low and sell high. Obviously, we have seen a very tremendous move here from the lows. So we formed this key double bottom, boom, boom, and a spectacular breakout. If we zoom in to the candlestick we posted for the week that has been, we do see some exhaustion here from the bulls. We went up there, but then the bulls freaked out. That's interesting. So yeah, there weren't that many, well, by definition, those who expected, new buyers to come in, they were disappointed. Of course, we have to be careful about drawing conclusions. It's not given that this is the high, but it becomes more interesting to look for tin futures for bearish opportunities when we have these kinds of events. If we go here to the daily data points, it's been a strong rally. We have occasionally pulled back to the purple 20-day moving average, also the 50-day moving average, but recently we did have this pullback approaching the blue 100-day moving average. So when the sellers come in, they are willing to sell at lower levels than what we have seen in the past. So here you have this dynamic where there are buyers that come in, but here the selling pressure has been a bit more assertive. So there is a bit of a change in the force here. When we compare here and look at different indicators, the MACD we had, we have now, it's actually went higher than what we saw during this super rally. So we've been, from a momentum perspective, it's been even more euphoric. And in this instance here, we did see a major bear market. So let's actually measure how substantial that bear market was. So from this high to this low, minus 61-ish%. Obviously, that's pretty substantial. When we look here at the RSI, we recently set a record, and we've seen a declining here on the RSI. Distance from the purple 20-week moving average, green 50-week, blue 100-week, and the red 200-week moving average. We had very extreme readings that historically has a tendency to signal, to forewarn that there could be some substantial downside. So something to be aware of. Looking here at the daily data points, looking here at the MACD, even though price has been going higher, we have seen this, you see these lower highs, and to an extent also lower lows here on the MACD, and that is also reflected here on the RSI. So there is a change happening. So this is very interesting, because even though price has been going up, there's things happening deeper that could forewarn that some more significant pullbacks could be on the horizon. So here we look at the correlations. So there's an 84% positive with the S&P 500, 92% positive with the metals and mining ETF XME. 94% positive correlation with carbon emissions futures. That's interesting. Minus 64% negative with the dollar index. And 89-ish% positive on the daily data points with the S&P 500. Then all of a sudden we have a 47% positive here, short term, with the metals and mining ETF. 86-ish% positive with carbon emissions futures, and 53% positive here with the dollar index. When we look at the seasonality for the JJT, which is the Bloomberg Tin Sub Index ETN, then we do see here on the seasonality that there tends to be a sharp weakening in strength from October to November. December, historically is strong. The problem here is that we only have 3 years of data, so we have to be extremely careful about jumping to conclusions based on such a paucity of data. But this is the seasonality information we got. I did try to look for some other tin seasonality here, but I didn't get any. So the futures market is definitively, very much, for professionals. So thankfully there is the JJT. It's an ETN. Expense ratio is not that bad, 0.45%, which is decent given that there's not much competition at all in this space. Assets under management, a mere $18 million. Average daily dollar volume is also limited, so it wouldn't be a bad idea to consider limit orders when buying this, or if you are considering more bearish strategies, which I think are the more interesting opportunities on the horizon. Okay, so to sum up my take here for tin, I do think that yes, of course, the bulls are still in control, but we did see that there's something happening here, when you look a bit deeper, that, it's very difficult to call tops, but I do think that it can be more beneficial to look for bearish opportunities for tin at these levels than to bet on, some last minute investors to bid it even further